return of volatility. Terry Duffy does as well. Why do you see that?
Well, I mean, if you look at the averages across multiple asset classes, volatility continues to fall in recent weeks. Couple that with a rising environment of uncertainty, as we've heard from several of the other guests today, and frankly, a lot of people at this conference. We've got two major macro themes that are going to come to a head in the next couple of weeks. One is, will we get phase one of that U.S.-China trade deal? Recently, we've heard, optimism about that, but that could change, in a second. And then on the flip side, you've got the U.K. election coming in, the first 2 weeks of December. And there's going to be a lot of implications around Brexit on the back of that. So I think there's a lot of people who have had a good year, and it's very possible that they've got their finger on the sell button and they may take some profits if we start to see some, a spike in volatility in December.
Are you positioned for that? Are you looking for a decline in
stocks?
stocks?
Well, we've got several defensive trades on in the portfolio. We're short energies. We're long precious metals like gold and silver, which obviously would get a nice pop if we saw a rise in volatility and sell-off in stocks. We're also short a basket of emerging market currencies versus the dollar. We continue to be long global equities, but some of our faster, shorter-term models we believe could probably get us out of that trade if we started to see that rise in vol.
Just to be clear, I mean, you're a quantitative hedge fund. For people who may not know what Campbell does, you have about $3.5 billion under management. Is that right?
Correct.
So, I mean, the trend, though, feels like it's higher for equities, does it not?
Yeah, absolutely. So some of our longer-term momentum strategies are going to be following equities higher. But the whole point of being a multi-strat fund is that you blend quantitative macro models that are looking at economic data. You blend shorter-term strategies to help you be more nimble when markets tend to turn. I mean, I think what's really interesting on the macro side is and you've mentioned this in your show already, is central bank easing. Two of our best trades this year were in Australia and Europe, where we were long the stock and bond markets, we were short the currency, and we were taking advantage of that easing on the back of the global weakness we saw as a result of the trade wars. We don't have that trade on here in the U.S., though. We do believe that the Fed will continue to stay on hold and be data dependent. It's entirely possible that we see some more easing next year. But I think much to the chagrin of President Trump, we will probably not see an easing here by year end.
But and I asked this of Mr. Duffy as well, I mean, having that in your back pocket's powerful, though. Is it not? The Fed needs to become more engaged. It's going to get more engaged.
I think all central banks will get more engaged if we see a pickup in the decline. And that's why, once again, I take it back to particularly the trade war. That's why that macro event is going to be so important to see whether or not things are getting better or are they getting worse. There's an entire possibility that the Chinese decide maybe they want to negotiate with either a new president or the same president after the 2020 election. So we'll have to see what comes about in December.
You say you're looking for a return of volatility in December, but you're not looking for a return of the kind of December we had last year, are you?
I don't think
it's a big swoosh.
I don't think it's going to be as dramatic as what we saw last December. But once again, there are a lot of people that have made a good amount of money this year, and I think it's entirely possible that those people are going to start to take some of the profits off the table, lock in those gains at the first sign of an issue in the marketplace.
Yeah. There's also the likelihood of, or at least the possibility, I should probably say, of a performance chase that counters sort of some of the profit taking. But we'll see. Good to see you again.
You as well. Thanks.